Hello, everyone, and welcome to a new episode. This is your host. My name is Roupen, and welcome to Delta Health Tech. Today, I have a very special guest, Aaron He's from PitchBook. He's a senior analyst and a leading financial data and a research firm. Aaron brings a wealth of knowledge and expertise to our discussion today. In his current role, Aaron focuses mainly on analyzing trends, deal activity, and the overall landscape of the healthcare industry. He has authored many reports, which I like him, and I read his reports, and they are very insightful in this space. And he provides a valuable insight to investors, startups, and industry professionals. Today, I want to dive into one of my favorite reports that he published recently, and it's about the unicorns in health tech. What makes a company to be valued more than $1 billion? His report offers a comprehensive look at the funding trends, the market dynamics, and the future prospects of these high-flying companies. So, if you're a VC looking for the next big investment, or if you are a health tech founder seeking to navigate the complex landscape, or if you're a physician, you're interested to understand how technology transforms patient care, this episode is for you. Okay, without further ado, welcome, Aaron. It's great having you here today.
Great to be here. Thanks for that great introduction.
Thank you so much. And I just want to say a disclaimer, I really love PitchBook. I follow their website, I follow their newsletter. It offers great insight, whether you are in the health tech or you're not in the health tech. If you want to understand the startup world, the venture capital, the funding, the trends in funding, and how things work, it's a great website to be in. So big shout out to PitchBook. Kudos to you guys. And they offer like free stuff, which are very insightful. And also like with the paid subscription, you will get tons of insights in the market. Without further ado, I want to start with Aaron. So if we want to go to the reports for the listeners, the report is going to be mentioned in the comments below. Your report mentioned that the late stage funding for health tech unicorn slowed down significantly. And this is something I noticed. I work with angel investors and I work with VCs, and I noticed that recently funding is not there. Current health tech unicorns combined raised around 12.1 billion in VC funding in 2021. In 2022, this dropped to 4.8 billion, and in 2023, it dropped to 1.2 billion. What happened? What do you think is going on?
Yeah, so great question. I think that's sort of been the key question on the mind of a lot of investors and market participants. Obviously, we've seen VC investment decline across the board, not just in health tech, across all areas, but it has been especially pronounced, as you mentioned, with those figures in health tech unicorn investing as well. But I think it's been a combination of a few different factors. I think one is lack of exit opportunities. It can be challenging for late stage unicorns that in a better environment, say in 2021, they might have been a year or two away from an IPO. And so that makes it easier to raise funds. But in the current environment, at least what we've seen for the past year and a half, if that IPO can't be predicted or expected anytime soon, that can make it difficult to kind of bring in new investors at those later stages. Secondly, I think the criteria for VC investment has significantly narrowed, and I think we can get into this a little bit more later as well. But investors have been staying away from higher growth, less profitable business models, and have been prioritizing the higher quality investment opportunities with their dollars that are available. So that kind of narrows the scope of opportunity for investments. Another reason I'd say is from the lack of capital being recycled. I think this ties into to the IPO market as well, but just with the limited number of acquisitions that have been occurring, investors have had generally less dollars to work with, and they've also faced pressures from their LPs to be more discerning with the investments that they do take. And then finally, I'd also highlight the valuation aspect, which certainly is affected by macro factors, interest rates, and other macro conditions as well. The valuations for health tech unicorns have risen for, in some cases, for the higher quality names, but in other cases have held steady or declined. And then just generally with the decline in kind of growing valuations across the board, or the difficulty in growing valuations, that means that just definitionally there's fewer unicorns being created, which leads to fewer VC investment in health tech unicorns. So I think kind of all those factors are sort of combining to cause the material decline that we've seen just over the past kind of 2 to 3 years.
Gotcha. So it looks like that in simple way, like VCs are making or looking into ways of multiplying or increasing their money since there isn't much IPO going on. So maybe they are shifting their focus on the business model and the profit, how the profitable the startup is. So do you think that this change in the expectation that VCs are looking more to the profit right now and not waiting for the IPO is what's happening? What type of like business model do you think that it will become more successful in this environment?
Yeah, yeah. Generally, business models have shifted from away from direct to consumer and toward B2B models, or even B2B to C models, where the consumer as the patient is the end user, but it's being sold through payers and health plans because those enterprise customers tend to be a little bit stickier. And in telehealth specifically, I think there was a lot of pandemic disruption that created a lot of hype and investment in primary care general telehealth. But now we've seen kind of that pull back a bit, and have seen kind of an emergence of interest in specialty health in areas like gastrointestinal, substance use, for example. And then I think that hybrid care models have sort of become the default gold standard as it relates to digital health, at least. For example, a company like Kindbody has been leading the way in hybrid fertility care. More generally, I think the business models that can truly impact the standard of care are becoming increasingly important. We've seen that in medical imaging, for example, with AI-based diagnostics, in other areas like value-based kidney care, and then in another AI area of clinical documentation, which can dramatically kind of impact the provider's use of time and make that a lot more efficient. So those are kind of some models that where we've seen outsized investment even in the current environment. I do think that eventually, though, we're going to return to a more positive market environment for private markets, especially in health tech. I think the cycle is not going to last forever and will eventually shift back, just because innovation sectors are highly top line revenue focused by definition. But in the meantime, at least for whether it's the next few months or through the end of the year or into next year, I think investors are still going to have a high bar for both their portfolio companies and new investments, and really kind of looking at profitable business models, sustainable profits. What aspect of the business is recurring revenue, and how sticky their customers are. Kind of going back to that, maybe a greater tilt toward enterprise compared to the direct-to-consumer space, which saw a lot of activity during the pandemic.
So if I'm like startup founder, I should really focus on creating a profitable business model that brings money right now and maintain my customers and sell that pitch to the investor, rather than telling them that this company was acquired and we will be acquired, or we might achieve an IPO.
Yeah, exactly. I was at the JP Morgan healthcare conference this year, and virtually every company that presented talked about their path to profitability, whether it was EBITDA goals or free cash flow goals, and a lot spoke as well about their cash run rates too. So kind of in the current environment, it's it's talking about profits. In 2021, there was a lot of talk about total addressable market and maybe aspirational goals, and I think it's a little bit more practical now in terms of profitability, and just making sure that you have the kind of the cash to get through into your next funding round or to achieve milestones, etc. But yeah, there's no question it's been tough for the last 2 years for this industry.
I would love to pick your mind also on right now the wave that we are seeing. You mentioned the COVID wave, and I was there. I was very interested in virtual care. That was my research topic actually, virtual care and implementing virtual care and patient outcome virtual care. And you mentioned that how there was tons of funding in that, and now that hype is gone, and now we are in the AI hype. Everything is an AI. Everything should have an AI algorithm. What do you think about this? Is this like an hype, or is it something it will see a future, it will sustain more than virtual care and telemedicine in healthcare?
Yeah, I think the applications for AI in digital health are still being worked out to an extent. There's not a lot of, I don't believe there's a lot of immediate applications for generative AI, for example, in patient-facing healthcare. Although, one company that raised recently, Hippocratic AI, has kind of gotten a lot a lot of buzz about
Yeah,
how they can. You might have heard of them. They're
I
maybe trying
know.
to be the differentiator there, but generally speaking, in conferences recently that I've attended, there's been certainly a lot of talk about AI, definitely in medical imaging, as I mentioned, and there's applications for behavioral health, mental health chatbots, things of that nature. I think a lot of the companies that stood out to me in AI for health tech, at least, had been pursuing AI technologies, before the current hype cycle. So I think that's, it's not really because of the hype that they're having success. It's, that was part of their model from the beginning. But yeah, I think there's no question we're in a bit of a hype cycle for AI right now. It's been sort of a bright spot just across venture investment, generally speaking, with sometimes sort of crazy valuations, but a lot of potential to change the game. But I think there's still 5-10 years from now, we could see emerging applications for AI in digital health. But right now, I think it's more of a longer term trend to watch.
Yeah, I completely agree with you. I'm in the trenches every day, and I'm very surprised, the physician reaction to ChatGPT AI and stuff. It's very scary. So I use AI in every day, whether ChatGPT, whether Cloud, whether Perplexity, whether you name it. I use tons of AI scribe tools. But whenever I come and talk to my colleagues, they were like, "Is this allowed? Is this okay? Is this ethical?" There are tons of physicians who don't know what ChatGPT is, tons,
Mm-hmm.
which is very surprising. It's crazy. I think, but they will need 5 to 10 years. Always healthcare is behind other industries to adopt a new technology. We are very conservative.
Mm-hmm. Yeah, I guess the other thing there is the regulators have been pretty receptive to AI technologies for risk scoring, for example,
Yeah,
for
yeah,
heart risks, heart health risk, ECGs, etc. But when it comes to actually diagnostics or diagnosing diseases,
exactly.
there's been reluctance to kind of go there at the moment.
I completely agree with you.
Yeah.
And talking about AI and companies in AI who raise, I think the companies who get lots of hype are the companies that raise the most. And that brings me to Olive AI. I want to just shift gears and talk about Olive AI. So this is a health IT company with the most venture capital funding ever. Why do you think this company failed?
Yeah, it's a good question. It's hard to believe they had the most money raised ever, but um, you know, I think what happened to Olive AI, there's some particular things that were just specific to their company, really, that maybe aren't don't lead to conclusions broadly speaking. But certainly the company had some strategic missteps. They tried to get into too many business too many businesses. Their CEO even sort of admitted that they lost focus a bit as they tried to move into health management, surgery analytics, which is never a great fit. So I think there were some operational and potential leadership challenges there. But I think they were also operating in a market in rev cycle that doesn't necessarily require fancy models in some cases, and fancy AI models, and there could be solutions out there that maybe are a little easier to work with. Um, but I guess even in a strong economic environment, there's going to be startup companies that fail once in a while. So I don't put too much stock in all of AI's demise on its own, but at the same time, we've certainly also seen other companies, high profile companies like Pear Therapeutics comes to mind as well in the digital health space that went bankrupt even after a successful IPO. And so kind of once you clear that hurdle into an IPO and then have issues that can be kind of a harbinger of maybe the business model isn't working. But I guess having just a couple of these failures the last couple of years is not so bad, but certainly the longer that interest rates remain high and debt levels are high, then there's more risk of this happening. But yeah, that was definitely a case that was a little bit unusual and hopefully doesn't happen and to happen too often.
Yeah, yeah, it's crazy story. Like right now, it's I think people are very cautious on what to invest in and why. It's very scary because you never know who's gonna. I think there will be tons of companies in this space, but the ones who like persist, like they will become the major market shareholder. But there will be tons of companies that will be knocked off in the next couple of years. I might be
Yeah,
wrong though.
definitely.
Yeah,
No, I totally agree. I mean, you can't have if you have 12 companies pursuing the same market, they can't all be,
exactly.
long-term winners. You need to kind of have some shakeout a little bit.
Yeah. I want to go back to your analysis, and and even now you mentioned that so there are several spaces: the musculoskeletal solutions, the digital therapeutics, and behavioral health. So those are categories that are seeing a high rate of consolidation. Can you just like elaborate and explain like why do you think that these areas are ripe, and what are the potential benefit and the drawbacks in these areas and in this trend?
Sure. Yeah. I think it depends on the sector to an extent. In digital therapeutics, I already mentioned Pear Therapeutics, but there has been a lack of progress on the reimbursement side with payers essentially being slow to kind of adopt these technologies and to assign codes and to really kind of clear the bar for wider adoption. So because of this, I think some startups will likely have to consolidate to get through the next few years. It's also been increasingly challenging with Pear's bankruptcy in that I just kind of heard from market players that when you do have you know um, a company like Pear that doesn't exist anymore, it just makes it harder to trust these sort of smaller scale vendors because the payers want to ensure that they're going to be spending time and effort working with startup companies that they're going to be around longer term. That's not a waste of their time. So I think that's kind of had a chilling effect on digital therapeutics broadly. Um, I think as it relates to consolidation, if you're a digital therapeutic startup and you only have one product or a couple products, I'm not sure if that makes a lot of sense longer term from a business model perspective, because I think ultimately you want to have a menu and trying to tackle different chronic conditions, for example. So I feel like it would be better to sort of combine these technologies and eventually have kind of a platform approach in this area. You mentioned musculoskeletal. That sector is pretty interesting to me because there's certainly been some winners that have emerged, like Hinge Health, Sword Health, and certainly there's others out there as well that are sort of at a lower scale at this point. But I think long term it ultimately makes sense for them to be just one or two virtual MSK players in this space, because if they're kind of jostling against each other, there could be it just sort of makes it difficult to grow to an extent. So I think consolidation makes sense there. And then just broadly speaking, when we're looking at potentially unprofitable business models across all of digital health, um, you might have to consolidate in order to kind of survive and live for the next cycle. But in terms of drawbacks, yeah, there's always challenges with integrations, and they don't always work. We've seen some cases where M&A doesn't work to an extent, or folks might overpay for a business. But if you're combining two businesses that are currently unprofitable, you might end up adding costs, or there might be integration challenges, and so that could make turning the corner on profitability potentially more difficult. So I think there's certainly reasons to look into consolidation, whether it's to take advantage of lower valuations, or to to eventually uh, grow into a more consolidated business model. But yeah, there's definitely challenges and drawbacks to you don't want to be I don't think you want to be doing that constantly. You don't want to be consolidating as your main goal, but sometimes sometimes it makes sense for certain businesses.
No, I completely agree with you. And the other problem with digital therapeutics is like
Yeah.
there is no IP, like there is no barrier for entry. Um, like in
Yeah.
biotech, you can come up with a drug. If it works, you can get an IP, and you can sell the IP even without selling your product. But here, like in
Hmm.
digital therapeutics, like it's very hard to create an IP. And that's a question. And this is something I'm seeing also like in the AI scribe company like space. There are tons of companies that are entering this market, and there are no barriers of entry. Literally, like people go and get GPT-4 API, and then they hire some software developers. They develop like a um, user interface, proper user interface, combine both, and that's it. Like, and they use some root prompts in the background where the physicians can't see the prompts, and you just extract the transcript, tell ChatGPT that write a history or physical exam, and like that's it. You become an AI scribe company. The barrier of entry is very low. It's mind
Yeah.
blowing.
Yeah. It is. It is, and that's a problem as well. And if you don't have the if you don't have regulatory approvals, or if you don't have kind of
Yeah,
that framework, it just sort of can be easily copied in some cases. But I do think it's interesting as well to think about digital therapeutic applications for drugs as sort of drug companions,
fair enough.
because
Yes.
effectively that could be theoretically implemented with the regulatory approvals on
Yeah.
in
Yeah.
tandem with the drug. So that's something that I'm watching, I think, over the next few years, as kind of as an opportunity within that space.
Yeah, I completely agree with you. I think there is some interest, especially like from pharma companies, in buying digital therapeutics that help their drugs. I can't remember the name of the company, but I think they were bought by Roche, maybe. They have an app that helps to patients to monitor their blood pressure, and depending on their blood pressure reading, decide whether to take the drug, the blood pressure medication, or not. I read this. I remember it vaguely somewhere.
Hmm. Yeah, exactly. That's I think we
Yeah,
could see more of that for sure.
yeah. And also, like there is more interest right now by investors in certain categories as well, like weight loss, value-based
Hmm.
care, women's health. Why do you think also there is shift toward these categories?
Yeah, I think the interest in weight loss is to an extent pretty obvious with the rise of
Yeah, Ozempic, it's all over the
GLP-1
place.
drugs, Ozempic, and all the other variations. But it is certainly a good match for telehealth, because once you get the initial prescription, the idea being that you would, unfortunately, you would have to be on these drugs longer term, to kind of maintain the effect, and so it can be certainly a match for telehealth if you're just simply represcribing these drugs on an annual basis, for example. So I think that's where we saw Weight Watchers go out and acquire Sequence, and there's been a kind of further other startups that have raised money in the weight loss space just in the last 6 months, Knownwell being one of them as well.
Mhm.
So I think that's a sector that I think is still continuing to grow, and I think it's maybe a bit unclear where the exit outcomes will come from. But I do think that certainly patient adoption is certainly rising. Um, thinking about other categories, yeah, value-based care. It's been a constant theme in healthcare for many years, but I think we're
Mhm.
starting to see some additional momentum on the VC investment side, particularly with value-based care enablers. And my colleague Rebecca Springer recently published a great report on that space. That's sort of an area that she's dove into in detail as well. And then I also highlight virtual substance use disorder treatment, which is a sector that I took a look at in my last quarterly digital health report. Just a few weeks ago, Pelago raised 58 million in virtual SUD treatment. And in today's environment, 58 million counts as a pretty big round. In 2021, it probably wouldn't have made any top 10 lists, but that's pretty decent in these days. And then recently we saw Bicycle announce a partnership with Talkspace in the SUD space. And then as well as industry conversations sort of lead me to expect further partnership announcements in that realm. For example, at JPM, Headspace, which is a top health tech unicorn, they mentioned that they're looking to partner with specialty telehealth providers, and they mentioned SUD as one category there. So I think that's something we could see, looking ahead. And Color Health as well is another company that I believe may look to expand or partner into SUD. So that's an area that's seeing investment, that there's partnership M&A opportunities there with some of these sort of larger players. And I think it's something that is just generally undertreated and could benefit from awareness and kind of growing adoption as well.
Cool. And shifting gears and talking about we were talking about IPOs. We're we're in April 2024, past Q1. Who do you think will achieve successful IPO in 2024, and what factors do you think are contributing to that?
Yeah, great question. There's definitely been a lot of talk about IPOs or potential IPOs over the last 6 months or even the last year, certainly. Current profitability or path to profitability is a key factor. I mentioned that at the JPM conference, a lot of companies did talk about their kind of path to profitability and mentioned that's going to be kind of a key metric to going public. So that's certainly what investors are demanding right now. I think we also talked about AI and companies with an AI tilt. I don't think they necessarily need to be pure AI companies or generative AI, but if you have an AI business, that could certainly help. And names like Spring Health in AI-based mental health care, or HeartFlow in medical imaging come to mind with AI-powered heart imaging. And I think some other important factors include not being reliant on regulatory approval decisions in the future. We mentioned digital therapeutics, or having secured that already. I think it's important also not to be reliant on just one product. Having a comprehensive business model is important. And then certainly, I think there's been a lot of talk around recurring business models or service businesses, as opposed to what we may have seen in the past in direct-to-consumer sectors, like with 23andMe, for example, where you sort of have a one-time
the
purchase.
Most scary example, yeah.
Yes, exactly. They haven't been able to build that recurring business. So I think when you can, subscription businesses are obviously very in vogue right now, and then enterprise and B2B models. But yeah, I think right now I don't actually expect a lot of health tech IPOs to occur this year. As you mentioned, we're already kind of into late April at this point. But if you would have asked me 6 months ago, I think I could have listed 6 or maybe 10 that I think would could IPO in 24. But I think just talking to a couple of these companies and just general, what's going on in the market with sort of inflation being sticky and interest rates not coming down as quickly, I think those are sort of some headwinds there. But I guess in terms of specific names that I think could IPO, maybe not potentially by the end of the year, but within the next 12 to 15 months. Spring Health, I mentioned in mental health care, Hinge Health in MSK we talked about, and then some other companies kind of on my short list that we've referenced in our research as well. ZocDoc, Omada Health, Headway, Headspace, and then PE-backed Quantum Health. I understand with their PE owner, there's some pressure potentially to exit in the next year or two, and they do have a profitable business and they've been around for a while. So Quantum is probably near the top of my list. But there's probably 8 or 10 that I think that are profitable that could go public. That the other thing I think to consider is a lot of these names, they do have pretty strong balance sheets, and so they can afford to be patient. They don't necessarily need to be the first one out of the gate. They can wait for other IPOs to go up first and maybe see how that goes. So for that's kind of another reason why, even if they are ready to go public, they might wait for higher valuations, for example. So that's why it could be pushed into later this year or 25.
Gotcha. Sweet. This is very comprehensive. I really love your answers. Like, you cover tons of companies in the space, and it's very impressive. You're able to remember all these companies in this space. I want to also ask your opinion about your report as well. So there is tons of change in leadership in health tech companies, especially like the unicorns. What do you think is going on? Why there is so much high turnover for leadership in the health tech unicorns these days?
Yeah, I think that a lot of startup companies tend to be pretty leadership driven, and success can rely in part on having strong, purposeful leaders who can drive their vision forward. But by definition, 50% of leaders are below average. So just kind of definitionally, there's some leaders out there that potentially aren't the best fit for a company, or you also have cases where founders might not be the best person to lead the company forward as you're looking toward in a more expanded business. I think you also tend to see turnover in the CFO position with companies that may be looking to exit or looking to IPO. Might want to have someone experienced come in for that. But yeah, as you mentioned, turnover has been higher, which makes sense. I think there's when you bring in a leader and they're looking to reach aggressive goals and those aren't met, that can be a factor. Or if they're coming in on an equity basis and incentivized to go public and that hasn't happened, there can be friction there, and that can cause turnover as well. And so I think there's a couple of different factors going on, but I think generally that even though there can be good reasons for turnover, that's C-suite turnover is generally a negative data point. So that's something I looked at kind of in my report on something that investors might want to be mindful of as they kind of look into businesses, because that can be potentially not always, but potentially a sign of some issues underneath the hood, so to speak.
Gotcha. And so it looks like this IPO thing is very, very complex, especially this year after coming out of the COVID and the pandemic and the drop in the money and increase in interest rates. So other than the IPO, in your opinion, what other growth strategies or growth pathways would you recommend for startups in this space or big unicorns in this space? What do you think will be most beneficial rather than IPO?
Yeah, I don't always give advice to startups, but I'm happy to share a few things kind of on my mind. But I think if it doesn't look like you'll be able to exit in the near future, extending cash runways definitely makes sense. I think we've also seen more and more startups seek out funds from their existing investors. Often these are unlabeled rounds. You don't have valuation attached from them, or just trying to keep the lights on, so to speak, for a little longer. We've also seen an increase in venture debt financing. So startups may need to get creative on the financing front as they sort of wait out the current environment. I think adapting your risk profile as it relates to what debt you're taking on, what investments you're making, making sure that you're kind of sort of balancing risk reward, especially since uncertainty looks like market uncertainty looks set to continue for the year. And then of course not all startups will successfully IPO, so startups out there may need to consider alternative exit paths like a merger, or getting acquired, might have to be considered, even if that's not the, even though that's not the first choice. You probably want to make that decision, I think, before you're forced to, before gets to desperate times. So I think kind of planning ahead for that possibility is also a good idea.
Gotcha. And the next 5 to 10 years, where do you think that opportunities are in the health tech space, and where are the challenges?
Yeah, sure. I think I'll start with challenges first. I think investors, especially generalist investors that may have gotten into health tech investing during the pandemic, they might be scared a bit by the pandemic boom and bust, and might be to an extent reluctant to come back to healthcare, especially when there's other sectors out there that might be getting hot, like climate tech, infrastructure, AI, right? So there's a lot of things
Hmm.
out there that are pretty exciting. But in digital health and consumer health tech broadly, um, business models need to prove out their profit potential, and that hasn't always happened in a lot of subsectors. I think one thing that makes health tech and digital health unique is that there's not a lot of large incumbents out there that have been, that there's, first of all, not a lot of large public companies, but even not a lot of potential acquirers as well. And so that, I think that makes it a challenge when you're looking at, from an investment perspective, what the acquirers could, what the exit outcomes could be. So that's a challenge, but I think that could change over the next decade as we see some public listings, as we see consolidation. Ultimately the sector will mature, and we'll have more incumbents, and that will, and they might spin up their own venture arms. So so there's different ways where this can kind of grow the ecosystem. And then also for opportunities, I think we're going to see a growing trend, in my view, of patients as consumers. I think patients are taking control more of their healthcare decisions, interacting with care navigation platforms, and even things like trying out longevity medicines via telehealth, or pursuing weight loss goals with Ozempic, GLP-1s, or even in a market I've looked at is glucose monitoring for non-diabetics. I think that could be more common.
Yeah,
So
yeah, I
I
agree.
think personally we could see sort of a second wave of health wearables. We saw certainly the first wave with the Apple Watch and devices like that. But I don't know exactly what form it's going to take. But I think that we could see kind of an increasing consumerization, certainly, of healthcare, and then maybe whether it's AI powered wearables or kind of a next generation that could kind of be interesting to watch over the next decade. So yeah, I think overall I'm optimistic about health tech over the next 5 to 10 years. Certainly, there's a lot of innovative areas, and excited to see kind of what innovations end up taking hold.
Awesome. I love it. Aaron, thank you so much for being here today. That concludes all my questions. This was very, very insightful. And I really love how insightful your answers were. Like, it's amazing the amount of companies that you can remember and who's doing what, because it's very hard for me to keep up with this. Thank you so much for being here today.
Of course, no problem. I appreciate it, and thanks for having me.